Topic 1. Summary. 4 lines. A sharp spike in Middle East tensions dominated headlines as Iranian missile and drone strikes disrupted flights, closed offices, and data centers in the UAE and prompted company evacuations. The attacks caused civilian and military damage in the Gulf region, raised fears of a wider regional war, and triggered massive travel and logistics disruption. Damage to cloud infrastructure in the UAE and Bahrain created digital outages, while oil price shocks and potential inflationary pressure worried central banks and markets. Short-term market stability hinges on restoring air and sea routes and repairing key infrastructure such as AWS data centers. Details. Overview. As U.S. and Israeli airstrikes on Iran expanded, reportedly including an attack that killed Iran's Supreme Leader Khamenei and other strikes, Iran launched missile and drone retaliatory attacks against U.S. and Middle Eastern targets, sharply escalating the situation. Physical damage, casualties, and military clashes. Iran's attacks caused civilian and military casualties, including U.S. service members, and infrastructure damage across the Gulf, increasing fears of a regional war. Aviation and travel disruption. Missile and drone threats from Iran led to airspace closures and restrictions across the Middle East, mass flight cancellations, reroutings, and sharp fare increases. Large-scale evacuations and repatriation flights followed. Travel restrictions and insurance policy war exclusion clauses created passenger uncertainty and potential extra costs. Data centers and digital service outages. 2 AWS data centers in the UAE and Bahrain were directly hit, suffering structural and power damage. Widespread outages affected cloud services and caused major disruptions to banking, payments, delivery apps, and other services. AWS advised customers to move workloads to other regions. Shipping and energy shock. Near total paralysis and threats to transit through the Strait of Hormuz sent oil prices sharply higher, Brent and WTI rising significantly, and tanker freight and option volumes surged to record levels. Insurers' retreat from war risk coverage pushed transport and insurance costs up. Financial market reaction. Risk aversion widened market volatility. Commodities and equities swung sharply. Some assets that had been strong in 2026, e.g. certain metals and Korean semiconductor-focused ETFs, plunged. Gold futures and spot fell about 5%, silver about 8%, and Korean ETFs posted steep losses. UAE and Gulf exchanges also dropped sharply. Central bank and monetary policy implications. Higher oil prices risk rekindling inflation and could force central banks to delay or forgo rate cuts. European and Asian monetary authorities weighed growth slowdowns against inflation risks. Some, Malaysia, Australia, Singapore, even faced the possibility of tightening. Corporate and economic operational impact. Cloud, logistics, and aviation disruptions delayed e-commerce, retail, and financial services and raised costs. Surging oil, gas, and diesel prices posed immediate risks to European and Asian real economies. Government and military responses. The U.S. pledged insurance support and escorts for Gulf shipping. Countries stepped up evacuations and monitoring of airports and financial markets. Short-term outlook. If clashes do not de-escalate quickly, higher energy and transport costs could reignite inflation, constrain central bank policy space, and trigger cascading financial and real economy shocks. Restoring AWS and other critical infrastructure and normalizing routes and airspace will be key to market calm. Topic 2. Summary. 4 lines. Energy markets were roiled by a Middle East crisis. Oil and refined products spiked, trading volumes exploded, and diesel was particularly hard hit. Insurance and security concerns around tanker routes near the Strait of Hormuz drove war risk premiums up and spurred U.S. consideration of insurance support and naval escorts. Investors flocked to cash and liquidity, while airlines, travel,